Okay, guys, so welcome to another video. We're in episode 6 of the game plan. Now, my plan is to release this as soon as possible, as I said. I made a decision to allow the market to have a little bit more time because, I mean, usually my trading on a Friday is done by about 6 o'clock latest. But, you know, in the current market conditions we are, there is room and need for us to kind of let the market have a bit more time to do what it's doing. You know, at the moment, we've had such a strong week of bullish activity. And there's just a few things I want to go through. I mean, I'm going to go through the trades that we're looking at, of course, but I definitely want to make sure that I go through entry plans, re-entry plans, and all of that good stuff. Now, if you've been following the videos, I really would like to hear from you. I've seen some of you guys at me on Insta and stuff and show that you took the trades I said. So I'm happy to see that you guys got some good entries and stuff. But this is only just the beginning when it comes to trading with the dollar index and etc. So for me, one thing I would say to you guys is that we should be very prepared for what the future holds. Now, without wasting any time, let's get into the video. All right, so in this week's edition, I think this is probably going to be the shortest episode I've ever done. And the reason being is because I think all of the trade and re-entries that I've given you, I think all of you should be in. And if you're not in and it's the first video watching, of course, I'll make sure that I always supply something, somehow, some way to make sure that you have an opportunity to make wealth with us and create wealth with us, right? So I'm going to start off with the dollar index as the foundation, as always, because that's the focus fundamentally. All right. From a fundamental perspective, remember, we're looking at inflation. Inflation is the overarching economic condition that is governing the market price action, although it's obviously pre-planned as everything else is. But just speaking on fundamental and technical terms only, inflation is the major cause of the issues that we're facing and seeing in our world economy. Now, of course, with the dollar being the world reserve currency, and I think this is probably like a broken record message coming from Michael, that because of this inflation situation and, you know, CPI being very high, the Federal Reserve is doing everything it can to strengthen the dollar through artificial means, which is going to be quantitative tapering. And this is why I believe, aside from just the technical side, that fundamentally makes a lot of sense for the dollar to have another second swing of major bullish action, which I believe is incoming and we're in right now. Now, from the time I first recorded any of these sessions, you know, to where we are now in terms of price action, you know, things have become really interesting, right? There's been a lot of great price action. The market has done a lot of fantastic things for us. And you should all be pleased with the entries that have come in for you guys, right? Now, on the other side of the story, okay, since the market has been quite an interesting one and pretty tricky at times as well, let's just be honest with ourselves. It was only right for us to, you know, pay attention to looking at what means and measures we can go for to get ourselves into a position to be ready to trade the markets, right? So looking at the dollar index again, where are we right now? Well, we've had the induction measures inside of this monthly supply flip zone. Now, if you're not too sure what a supply flip zone is, I'm going to make sure that and I believe it actually is already, in the comment section below, there is a link to the 4-part series that I've just concluded yesterday called Institutional Price Action Trading Teaching. Now, in that teaching, I go through all of these different terminologies that I use from start to finish. Okay, so you can use this to your own advantage to give you the foundational infrastructure to understand what's going on when it comes to price delivery mechanisms. Now, in those videos, I give you the foundational underworkings of how price is delivered from the interbank network. And if you don't know what it is, you'll find out in those videos all the way until we get to price action that we look at, okay? So for those of you who have been following on and you know what I'm talking about, the monthly supply flip zone, which supply now has become demand, is where we've had that last induction. Now, we had an initial one, the price took off, stopped off at this algorithmic level, but now we have a lower down one that we're dealing with, right? So moving forward from here, and we go down to the weekly, or actually, in fact, what I'll do, I'll keep this chart set and I'll just use our H4 one. Now, I'm using the H4 to give us perspective of the weekly, and I really want you guys to see where I'm looking at. Now I'm going to remap out this whole chart. Now, of course, from the chart that I gave you guys to get in here, you know, since that time, the price has done many hundreds of pips, almost 300 now. This was the exact entry I was telling you about, and I hope you guys all got in, okay? Any position you're in for USD CHF, for example, which has been our main focus, you should be very happy bunnies right now, right? So anyway, let's take a look at what's going on when it comes to the dollar index. I'm going to open actually a fresh chart so that you guys can see this freshly, because I think when you have markings on the chart for a while, it can take a toll on have maybe a mental bias possibly. So it's good to have a clean chart. So we know where we are, all right, in terms of price action. If I go down over to the weekly and then over to the daily, now first things first, I'm actually going to draw the zone out that I marked out before, because I think it's important to look at. So the zone that we're looking at is here, daily. All right, this is the D1. All right, this was where we were looking at this rate area right here. All right, and our focus was, put this back here. Our focus was to look at what the price is doing in this range right here. Now you can see that we had a bit of a depressed price. Now this price action here, where the market was basically trendless or almost trendless for a while, almost in a range. For those of you who've been in the academy, of course, you know exactly what this is an accumulation range, a very small one, okay? And there is still some directionality, because I don't draw trend lines for any purpose apart from looking at where the market will manipulate trend line traders. But if you were to draw a tiny trend line, you can see that there's still a little bit of directionality here. But there is a range or a moment where there is accumulation, and the accumulation range is here, right? So this range of accumulation that we do have, and I'm going to put this here, this range of accumulation, remember, accumulation ranges are the birthplace of price, or the beginning point of market delivery, right? When the market is making its way to create a new trend, there will always be a range of accumulation, right? Now, after the range of accumulation, the price has broken out now. And in the schematic diagram of what happens next, what we'll be looking for after this situation. Now, after a situation like this, what we should be looking for would be the next area of where price should be returning to. Now we have two, and this is where it will become interesting to see what we do right here. Now, the most highest up supply zone that the price has managed to break above, which is one that I was saying that we should look at, is this one. Now, why is this supply zone important? Well, first of all, if I zoom in here, now I'm going to do something. I'm going to take out the period separator for just a moment, and I want us to just pay attention to this candle over here. The candle I'm talking about, by the way, is this candle over here. Now, this candle over here, right now, put this out. This candle over here is the high of the previous month. This is the high of April. All right, now if I put the period separators back on, you see this is where the high is. So let's observe what's happened. Now you understand the mechanism of how flip zones are created. So this is a supply zone right here. This is a supply zone, and I don't know why I pressed cancel instead of pressing yes or 14. So this is a supply zone. Now we're on the D1, so it's a D1 supply area, okay? Supply liquidity is here. So you can either call this a supply zone, or you can call this a supply order block. Zone, order block, same situation. So I'll put supply order block. All right. All right, so supply order block / zone. This is where we are right now when it comes to the price action. Now that we know this supply zone order block situation has happened, now what is the key thing that I said to you guys on the live yesterday that we need? It was exactly what the price has done. It's actually almost played out exactly as necessary, as needed. So let me just also put this here. This is our accumulation range, okay? So accumulation. All right. Let's put this in blue. And let's put this in a color that's actually visible. I think I'll actually use blue because it probably would be. Yeah, so this is our range of accumulation right here, okay? Now that we have this range of accumulation, we've birthed a new trend. Now, I've got you guys to get in here, which is more advanced price action, because I was able to give you the entry before the accumulation broke out into an expansion. And there is a way to do that. In the advanced course I teach in the Wealth Group Academy, which every student has access to in the Wealth Group Academy, I teach exactly how to know what wick to look for to come out. Now, I gave you guys a shout, okay, and if you want to know more about how to actually capture these wicks, all right, send us a message and we can help you onboard you to teach you exactly how to do that. Because, of course, if you got in here instead of the break of this range, you would have had a lot more profitability on any, even if you were trading the dollar index itself. Now, back to what we're looking at here. Yesterday's candle was such an important close for us, and it marked the beginning of an important point. So right now, I know that you're probably wondering, guys, today that, some of the trades were in, the price basically went back to where it started from. It wasn't really, what we would have wanted and stuff like that. And that's fair dues. I understand the market was a little bit funny today. It kind of reversed. Now, usually Fridays are where reversals happen. So I wasn't really too surprised that the market kind of wiped out some of the gains that were created yesterday, almost all of it. Because we're in a downwards trend, you have to understand that there's so much activity going on that you should be able to see by the time we finish learning the teaching, but it's literally happening. Okay, when the market keeps pulling back the way it does, sometimes the market is trying to find more liquidity to continue going short or long. Sometimes the market just pulls back just to stop people out who are trading their stops. Just whatever they can to ensure that nobody at the end of this major rally that has come in is more profitable than the intelligent money of the market, right? Now, what I want us to see here is that this body close here means a lot. Now, in yesterday's teaching, remember I talked about wick to body and body to wick, all right? What that means. Now, we've had a body close above the high of the previous month. So what that tells us immediately is that really and truly right now, we're in a position where the market is in a stage of continuation. Now, what does that mean? That means that the market is committed to continue going long. Now, this supply order block here has been turned into a demand zone. And let's look at what's happened today. Now, over here, the pullback that we've had over here between the highs, we've had no sort of manipulation. Prices just naturally pulled back. And look at where the price is closed to, or getting ready to close on. The price is ready to close on the high of the previous month, which is a really good continuation signal for us to go for a continuation long. And the expectations now is that since price has done this, the next nearest supply zones are over here. So next nearest one is over here. All right. And notice that why I say that definitely the price will continue going long. And I'll go through the different entry mechanisms and how that can happen. You can see that with this movement here, when the price went over here today, over here, the long or the short area, long and short area, which is above these wicks here, around this wick, didn't return to this supply zone. So this little sell-off we've had on Friday is more of a pullback for a continuation. When the price does get into these areas of supply, then we should be looking to see if there's going to be a stronger pullback. But I'll say off the bat, definitely going into Monday, we should be okay when it comes to pullbacks. We should, if the price does pull back in any way, we might have a few pushes down before we go long, but most likely we should be good to go. All right. So if we look at this supply order block here that we've looked at, my first scenario that I would say straight off the bat of where price should go would be for a long. Now, there's a few ways the price can do it, okay? One way is that the price may decide to come for the low of the day before, which is Thursday, okay? Depending on how price closes today, we may actually see on Monday that the price may decide to wick slightly lower, and then from wicking slightly lower, produce the long. All right. And then once we get into this area of demand, we can start to figure out what the price is doing, because we do have a long way to go. As I said, guys, the real mark of change, or I'll say the mark when we really come out of the bearishness or the bearish side of the dollar index, and we'll have to go back to the monthly, is when we pass the 104 level. Let's just say $105. When the day we get a strong body close above this month right here, which is the month of March, if the body of the candle closes above this month of March, then we should be looking for some very strong bullishness in the future. Now, the time that will take is really dependent on, of course, the market conditions, but I definitely do think that we should see this action, of course, this year. All right. So let's go through scenarios already. Now, why am I going through scenarios, Mike, that you go through every week? Well, I'm glad you asked. I'm going to tell you. Now, the foundation of why we use the dollar index, as always, is because for most of the time when I'm analyzing, most of the pairs that I focus on are major pairs. You know, I have no shame. I don't try to do complex pairs and go through different cross pairs or exotic pairs when it's not necessary. At the moment, the dollar is the main actor on the stage, if you want to put this on the stage of the world economy and of the financial markets. And so dollar price action right now across all different asset classes and including Forex as a financial instrument are some of the best conditions to trade. Very volatile, lots of liquidity, good pip ranges, good ranges for the day, the week, and etc. So there's no really need to move away from trading dollar-based pairs, okay? They're the most liquid, they have the least spread, even on a broker that has only standard accounts, for example, and no zero spread accounts, you're really going to get the best opportunity to trade, okay, either way you put it. So reality is, guys, that when it comes to trading right now, my focus for this year will be primarily on dollar pairs. Probably for the next 2 years, anything that's dollar denominated, that's going to be my focus. And I believe it should be yours too, okay? Because we're in a fantastic opportunity right now that the market has placed us in. And we want to take advantage of every opportunity that comes to us, right? So bearing all of these things in mind that I've just mentioned, all right, let's take a look and see what we have. So scenario number one, okay, is I'm going to put these two scenarios together into one. What we need, it will be some sort of induction beneath the low, because of course today was a great sell-off. If Monday opens with another kind of wick opening and the wick of the candle closes beneath the low of Friday, for example, that can be a great trigger to push us into this area of supply, okay? And from there, we can kind of map out where we're looking for in terms of continuation. Now, the big journey, I would say, where we want to be watching our positions the most is when the dollar index will definitely get into this range of supply. It's a massive range, it's 113 pips wide, and every part of this area is supply. I want you to see that. Now, of course, the triggers to bring the price short over here, as I said, price didn't get into supply for it to sell, all right? It really didn't. The last bullish candle before the price changed direction is this massive one here, not including this area over here, all right? So in this case, price hasn't returned to supply as of yet. So that gives us room to say that we should be looking for a long. So scenario number one is for a range anywhere between these two ranges. Let me put this here. Anywhere over here where the price is about to, and let me just put this over here. Let me just type that out, scenario one. All right, so scenario number one, I keep missing out the O all the time. I don't know why. But scenario number one anyway. All right, let's just go over here, 10. Scenario number one, the price action that we've got going along would be for the price to take the low and continue going for a long, right? This is scenario number one. And I can take away this candle for now. Scenario number two for me is a deeper return because, and I'll explain to you why, the supply zone, okay, apart from this one, the next or the second supply zone that the price used when it was going for the short during the March to April period is this one over here. Now, the thing is, if I was to take off this one for just a minute, and I'll undo that for a moment, we can see that price stayed within the body of the candle, didn't close outside of this area. We had a break here, we had a return, and then we had a slightly deeper return, which is where I gave you the re-entry last week to get in for a buy on USD CHF or and sell on all the other currencies, right? Now the price took off from here and formed this order block right here. So nested within this supply area, there is an order block that the price is working with. So what we could do in this case is introduce premium and discount pricing analysis as we've been doing for the last couple of days. Now at the moment here, I've left the retail levels on, okay, which is 23.6 and 38.2. We don't use these unless we're looking at market manipulation. Now, as soon as I do this, we can see that fair market value or the equilibrium point in pricing is at the 50% level is at 102.514. So what we could say, if we use these two areas together, is scenario one possibly may be a more highly probable scenario, just because it will make sense for the price to want to drop back to equilibrium. Okay, since we've gone strongly out of the discount area of pricing for buying, it will make a lot of sense for the price to come back to take this low and give us an equilibrium move from the equilibrium point all the way back up to further new prices, or new prices we haven't seen for a while. All right. So looking at these two zones together, this will make a lot of sense to do. All right. But scenario two, and this is important here, is that there could be the deeper pullback, which of course we do not want. And because the price is already strongly closed beneath the high, of course it can come back. My thing is that the induction to cause the price to go short, I don't think there's enough liquidity for the price to come back down to this area of demand. If it did so, that would be a great pullback and a fantastic entry too. But I do think it will make more sense for the price to come back to fair market value first. The fair market value, and we're talking about the dollar right here. So what the market, supposedly anyway, not necessarily true, but the fair, I'll say in this case, the fair market value for the dollar price compared to other currencies would be $102, right? So if the price comes back to fair market value, we can look for a reaction to see how the market reacts. And most probably, at least, it will be good to see the price get into here. I would say that for scenario two, if the price just drops straight down here, then there'll be no need to worry about the price struggling probably inside of this supply area, because at that point, it would have loaded up to an optimal amount of demand. If we're tracing the liquidity from the left, this area was a strong area of supply. When we broke it, we formed the order block here for buying. So if the price just came back into the same order block again, to any of the optimal trade entry areas, that'll be a fantastic trigger for a continuation long. Now, it doesn't always have to happen that way, because if we trace the price and let's say we go back down, now it's a bit difficult to see because I have so many markings. So what I'm going to do, I'm just going to quickly bring back the same chart here. And let's just draw the same area. So if I zoom in twice, and the area I'm talking about here is this last kind of bullish movement here, which I'll just take from the bottom right here. All right. Now, if you look at what happened in this last little bullish range, I can even take it even further. The last swing high to swing low before a new one was formed. I'm just going to take it here. Notice what the price actually did, and let's drag this along here. Right. So when the price did this movement here, what do we see? Well, the price did break very strongly, form a swing high. The price really dipped just in between the middle of seemingly nowhere, between the retail levels, and just took off again. So there hasn't been really a deep equilibrium price point pullback, and it doesn't always have to be like that. Now, in some circumstances, the price was already in discount, especially when it's a major reversal of like a historical point like we've been in, okay, where we've had it, as you can see here, for example, as I said, or maybe not in this way. I don't want to use a trend line to confuse you, but if we just look at this area here, this was artificially depressed price. The dollar was artificially depressed for 2 months, okay? This price here, the dollar was a lot more bullish than it was letting off, and that's for very good reasons, obviously. So that institutional money, smart money can get this, or intelligent money can have the best prices, right? So the price was depressed here. So after all of the accumulation in the range over here, then the only thing left to do was really to get the triggers for long, get the cheapest buys that they can get, and then start letting the price rally. And then other buyers will come into the market to take the price higher and higher all around the world, right? And that's what's going on. So if you take it from that point of view, then the price may not even pull back to 50% like we want. And that, I know I'm saying that and it sounds counterintuitive to what I was teaching, but the price may not have to do that, okay? So it's always about price context as well. So coming back to order blocks, which is an important price concept to remember when we're looking at price action, we go back to the dollar index here, all right? Let's just go over here to where we were. Now, trying to see my H4 charts. Here we go. There's this one, but I had another one, guys. Excuse me. Let me see if I can find it, or did I lose it? All right, here we go. This is the one. So coming back to our example, if I undo on this chart so that we can get the line. So looking at the price here, let's just take this line off now. What we want to be looking for, we've had our accumulation, we know that is here, right? We have our supply order block. Now, in terms of supply zones, the cheapest supply zone out of all of these 1, 2, 3 zones on the way down, starting from this candle right over here, this will be the cheapest supply liquidity area, because this supply zone has given birth, if you want to call it that, to this supply zone, this one. Okay, so all of the supply zones have derived their liquidity for supply from this main area here. And of course, this supply zone, well, it took a while for a new one to form. It took 1, 2, 3, 4, 5, 6 days before the previous one to a new one was formed, which I'm talking about up here. So this supply zone is a pretty sturdy one. So we could expect most of our price action to probably happen within this range. Now, at the strength at which the dollar is going for, there's another theory I have. Now that the price has woken up so quickly, I don't think that the dollar would want to waste time to kind of hang around at lower prices. At this point, I believe that there's probably aggressive buying that's going to continue on the dollar to keep the strength of the dollar, or to keep push the price even further along. That's my belief, right? I really do truly believe that. Okay. So with that in mind, scenario 1, which is the price coming back to fair value or just beneath this low at fair value market pricing or true market value. I like to use fair and true interchangeably, but I'm saying the same thing almost. Okay. The difference is that true market value, why I usually say fair instead of true, is because it's a fair price, but it doesn't necessarily mean it's the actual price of the market, because as we looked at with liquidity providers, there's always a premium on every price until it gets to you. Even when it comes from the broker to you, there's still a premium on it. So in a sense, it's a fair market price in a sense, or a true market price. All right. But anyway, I do expect to see if there's going to be any pullback in scenario 1, we should be bringing the price back to, they'll probably bring the price back to equilibrium again. And then from that point, we should get some more rallying going. Now, what does that mean for us? Well, if the price is going to be pulling back down, it means we're going to have a bearish dollar short term. So if I put this here, let's put this here. I'm gonna write something out so that you guys can see this. So let me do this here. So we've got a bearish dollar, so negative dollar here. All right, so if the price goes down short, we'll have a negative dollar. And I know my markings are pretty tight right now. Let's see if I can move this over to the left a bit and just get a color that you guys can see. Now, forgive me for using these colors and trying my best to just get colors that work. So we have a negative dollar here as a pullback. And then once the price does this negative pullback here, then we should see some dollar strength come in. This is scenario 1 for me that I believe makes the most sense. So over the weekend markets, we have a little bit of a lull on the dollar. You know, volatility is lower, volume is lower. So the dollar gets a bit weaker because the demand kind of wanes a bit. And then coming into Monday, Tuesday, as the market begins to continue pushing, then we should see some really strong dollar strength come into the market, right? This is what I expect the market to do. So if you're holding any positions, like for example, the AUD USD shorts, Euro USD shorts, there's at least another day or two for sure where the price will definitely continue to short. Now, market open is probably going to be really interesting to see what happens. I personally kind of left my stop losses pretty wide on the accounts that I have, just to make sure that the spread is not going to be crazy, because it may be. All right, but this is really the angle that I'm going for when it comes to looking at the price action. All right, so scenario 1, equilibrium. Scenario 2, the price will come back into, now let's see if the colors will do well. I really don't like the colors I'm seeing. I'm going to pick some better colors for next time. That's absolutely terrible. So let me just get rid of that. But Anyway, if I can just draw this zone for you guys to see it the best way possible. All right. I'm just going to delete this 2 for now. But scenario 2 would be a situation where we have a prolonged or extended weakness on the dollar, so a pullback, and the price comes back down into more optimal trading entries and then takes off for a long. So what we'll have here, it'll be the same situation, negative then positive dollar, which is, in essence, I'm saying I'm bullish. The only difference would be that from where the current price is right now in the market, my expectation would be for a more extended period of bearishness on the dollar before we go bullish again. All right. That is the only difference between the two. Now, if price scenario 2 happens and price goes into this order block and takes off, what that will be saying is that the market is pulled back into another discount pricing. So we should expect a pile of new money, okay, very strong high levels of money, I should say, which will produce strong liquidity, of course, to come in at this point. Also, if the price gets beneath equilibrium a little bit, then also liquidity can come into the market, all right? Or just buying can happen anyway from liquidity providers over to other places on the interbank network. So either scenario is still high probability. Now, personally for me, I mean, seeing the dollar index pull back here would just be kind of a lull of a week. Would be pretty boring. But of course, sometimes when there's been a week of a trend in one direction, you know, everybody's holding net positions in a certain direction for a while. The market may always try to find ways to kind of throw people off or get them out of the trend and into the wrong direction, or just stop them out. Okay. It has been a little battle this week, especially if you're trying to flip accounts. It's been a very strong head game screwed on kind of situation going on. Okay. And it's understandable because of how the market's behaving. But I still do believe that we are definitely on our way for a short. And the shorting in the market isn't completely done yet by a long shot. All right. So that's really my view of the two scenarios. Now, there is a third scenario, but I feel like it's very unlikely simply because yesterday's candle close gave us a lot of information. And this is why scenario 2 is actually my second scenario, not my first, because one of the key prices that the price was struggling around was this, you know, zone over here, or the high of the previous week. Maybe I should just use a line instead. Let's try and make this red instead so that it can stand out. So really one of the hardest parts that the price seemed to be struggling to get past was the high of last month. And it's managed to do that and has bounced to the other side. So as a reaction for a continuation is a pretty good one, you know. And so that's why I'm saying that there is room for the price to really just say, okay, I'm just going to take off now and continue. All right. Now, my only thing is I don't like that the price is actually in our favor near the end of the day. There's only about 2 hours left until the market shuts, but it's as though the market is still trying to rally in our direction. Now, there's a few times in history where the price has continued as it was meant to go on from, you know, previous price action. But I mean, I still just never trust the market. So this niceness that the market is doing where it's going in our favor near the end of the day, I just feel like it gives me more suspicion that on Monday or Sunday night for me in the UK at 10 p.m., they're just going to open the market with maybe a gap down beneath the low or something like that, just to throw everyone off. So I won't be surprised if I see it, but it won't throw us off, right? I hope it doesn't throw you off. All right, so these are the two scenarios. So either a shorter term, in summary, either a shorter term dollar pullback, all right, where the price gets beneath here into fair market value at equilibrium, which is, according to this range, if I'm taking the bottom and top as accurate as I can, 102.514. And then the price continues in the bullish direction that it's going in. Or we might have an extended dollar weakness where the price gets into here and then takes off. Now, the differences between the two, again, just to repeat, is that if the price does this more fair value movement to the 50% equilibrium level and then takes off, when the price gets in this supply zone, I'll be watching to see if there's any sort of reaction that might reverse the price, because just in case the price decides that it wants to pull back lower and give like a strong pullback and then take off again, we should be prepared for that to know what to do, especially with re-entries. If you're in at swing trades, if you got in for any position on the dollar index, when I gave the shout for us to get into the dollar index, which was down here at this lowest wick point right here, if you're in, like, for example, USD CHF from the beginning, okay, then you shouldn't have any worries at all. There'll be nothing for you to do. But if you've taken re-entries this week, then you want to be paying attention next week, you know, how the price behaves. Okay, but I am quite confident, and I can say that I believe the price is definitely going to be, it won't stay, even if it's bearish, it won't stay bearish for long. Okay. Now, scenario 3, what would scenario 3 be in a and I guess in the case, okay, it's a scenario 3. I'll just call it that. The case of scenario 3 will be the price does none of what I just said for scenario 1 and 2, and simply just continues as it means to go on tomorrow. I mean, saying tomorrow, Sunday night, for the new market week, and just continues going long. Okay. In a situation like that, though, I'll be watching to see how the price deals with the highs, just because the price may take off long initially to finish off the move it was trying to complete on Friday, and then after give us a reversal. And that one, in that case, I'll expect the price to go back to an order block, not just to a fair market value price. Because now we're not just talking about pricing, we're talking about liquidity too. Okay. So that'll be the difference. Now, with the pairs that we're looking at, all right, let's start off with USD CHF. This was the old marking, guys. I put on my Instagram and every other place today that I actually showed you guys the entry. When we talked about it yesterday, scenarios 1 and 2, if you listen to the video, didn't actually happen because there was no candle closes. But scenario 3 did happen, which is the price came back to this order block. Stop loss would have been here. And if you're in this trade right now, you should still, at the best, have got 145 pips, and currently should be sitting on just over half of that, so 76. All right, and the price is still in good condition to continue going long. So no harm done whatsoever. In fact, if you did get this entry, for those of you who got in with me at the early stages, it was at quite a wait when we first got in 2 weeks ago for USD CHF, because when we got in, USD CHF bounced around a lot. We had this initial move here, then the price pulled down, another move, price pulled down, continued. So if you got in here to this point right here, you would have maybe got the first 85 pips, all right, which it took us 2 weeks to get 85 pips anyway. But those of you who got in later on, and this is why re-entries are important, and I hope you guys take the video seriously, you would have got 144 pips within the same week, whilst we had to wait 2 weeks just for 85 pips, all right? At best, if you got right in at the bottom, 100 pips, but most of us got in around the 8, 310, 315, those kind of price levels, right? So in reality, the entries were only giving us about 72 pips in 2 weeks. But you guys, within, not even by the end of the week, but within the same week, you could have walked away with 145 pips. If you had a really good stop loss, like beneath the body of the candle here, which is only 3.7 pips, then your risk to reward would be absolutely crazy, right? So this is why I say to you guys that re-entries are powerful and they're important. Don't ever let the market think, or let you think that you can't re-enter again, because you definitely can. And we had a great demonstration of that just of today, as of today, right? And of this week as well. So now that you got this out of the way, let's look at USD CHF. Now, I'm not going to take it from the angle of these notes because I'm trying to reduce the clutter on my charts when I'm analyzing so you guys can see the price clearly. So I may not make too many notes, but I'm just going to mark out what I think with USD CHF. And then we'll take a look at some other pairs and see what's happening. So if USD CHF, as you guys know, just to quickly flash the old analysis here of why we're taking USD CHF for a long. All right, it's both historical, fundamental. There's a whole load of melange of levels of reasoning why we're in USD CHF for the long haul. So if I go back over here, this was the induction, which is the major yearly induction, which is the inflation trigger from 2021. We had the break of market structure, which was a key sign of price change in strength, direction from this bearishness in 2020 to bullishness that we've seen. So this break of structure that we've had here, right? Prices then pulled back down into demand, gave us our initial movement. We had a very strong long taking place. Then we had, of course, this moment here in history when we had a liquidity pool. Now, I believe price went into supply liquidity to do this. Yeah, it did. So the price came into this area of supply liquidity and broke beneath. The price wasn't able to break above it, so the price broke down beneath these lows and just continued to go short. Now, the low of 2022 started off here. We had a range of 91 to just above the 1 to 1 level for USD CHF. Now, next thing we see, okay, and this is a key here, is that the price has graciously come all the way back down to the beginning entry. Now, when I was giving you the chart for USD CHF, the price was fighting us. We had 1 wick, 2 wick, 3, 4, 5 wicks. Now, the real entry that when I knew the price was going to do what it was going to do is this last wick down here. When I saw this, I gave you guys the alarm that let's get back in. The first time I gave the call, which was an entry over here, the price broke straight through this. And I do believe that this was an extended manipulation to clear out anybody who's been in for these last couple of days, even in the inflationary long, okay, period of time. So bearing all of this in mind, what I can say to you for sure is that now we're in a position where the price has returned back to the order block of this initial movement. There's a very strong level of demand. Now, if you've been following my teachers when we were talking about accumulation, this demand actually stems back from a lot further than we talk about usually. Now, if I do something here, and I'm just going to press Control B and Control A, right? The liquidity that we're actually looking for or looking at, which is in this area here on the weekly, is actually derived from a lot more liquidity in terms of demand than you would think, all right? The demand zone here that has been around in the market since 2011, okay, has held the price above the 87 mark for 12 years, right? And periodically, if you notice, every time the price has fallen into here, even when we had the Euro CHF crash in 2015, the wick of the candle, yes, did close beneath the area, but the body of the candle have never been able to achieve so. So we had a moment of history in 2021, and that drove the price to, you know, above the 1-to-1 mark on the US dollar versus the Swiss franc before, you know, descending down quickly. Now, again, we have the same thing. Now, for those of you who are good students, you will know that if we zoom out and look at the context of this, USD CHF is in a very strong, extended, I would say, accumulation range, okay? We're right now in a range, and we've come down to the bottom half of the range, and we do have a trigger. Now, as we discussed with triggers in this teaching this week, as I said, everything is planned before it ever happens. This Euro CHF decoupling where, okay, the price was decoupled from the Swiss franc, okay, because they had a situation where they were trying to keep the Euro to CHF exchange rate at 1.20, okay? So 1 Swiss franc was, well, 1 euro was 1.2 Swiss franc, which was conducive for exports and stuff. Well, without boring you with that information, we had our trigger here. The wick of this candle created the trigger. Because you would say, if we're in a range, can't the price just bounce back up here again and then start selling off? You are correct. But what the price has done with this trigger is that now we have a structure. We have an A, highest point here is the B, and this last point here is the C. So when I told you about USD CHF, and I can go into deeper detail about why I think the US dollar is going to go for a very strong long, okay, because we need the price to get into this supply zone over here. When the price does get into the supply zone, I know many of you it's not a speculation, it is the truth, the dollar is dying, but this is the last attempt of the dollar to recover itself. Now, the reason why the price hasn't fallen further than where it has, you know, between 2010 and 11 is because it hasn't been in the key supply to do it, which is not until 1.08. And all of this completely lines up with what's going on historically in the news, what's going on with the dollar index with this long. And this is why I believe we're going to have an absolutely massive long until around 1.08. All right. Once the dollar gets to its strongest, this is where I'll be buying, for example, all my assets that are dollar denominated because they'll be the cheapest. So from this moment to this moment, I'm going to spend my time to be trading. That's all I want to be doing. And this is why I said to you guys to hang in there with these trades because we're going to have a very good ride going upwards. So now that you have that little context anyway, now forgive the neighbor's dog, guys, that you can hear. Our neighbors seem to always have a problem with the dog. Anyway, moving forward with what we've got. Now that we know this information, this is why this accumulation was so important because this accumulation is actually giving birth to a major bullish trend, a historical one. And remember, historical things, just like how Bitcoin was $1, then it was $10, it only becomes historical or it only becomes public knowledge when it's too late, okay? So you guys are really in early with the institution. So what does this mean for USD CHF anyway? So if I go over to USD CHF, let's go to the daily here. Right? If I draw this supply zone over here, what has happened with USD CHF today? Well, on these charts here, now some charts are different, which is a little bit of an annoyance to me, but from the moment USD CHF gave us an entry, and probably what I should do just to make sure that we're following the price correctly is I'm going to go back here and draw the demand liquidity that's driving the price over here, yeah? So let's just do that. Yeah, so if I go over to the D1 now, let's look at this. So for USD CHF, if I draw the same supply zone, you noticed, and this is the thing that I wanted to go through before, is that the dollar index is very highly correlated to Forex pairs especially, and is even more highly correlated in terms of the most correlated or most sensitive to the dollar index and the least. I'll say the US dollar versus the Swiss franc is probably one of the most sensitive pairs to the US dollar. So, excuse me, the US dollar and the Swiss franc, let me correct myself, is one of the most sensitive to the dollar, okay? So when we look at the price action here, if we were to do a quick flash between the two, all right, I put the order block back where it was, and I put this over here. All right, you see we have a supply zone, just like USD CHF has a supply zone that is broken above. Now, the great thing is, though, with looking at USD CHF, from Hugo's way, now, this is why I was saying it's a little bit strange, is that on other charts that I'm looking at, for example, with IC markets, and I'm going to pull it up in a moment, the chart reading or the price action on the chart looks completely different at the lows. And I'll show you in a minute, okay? So with the dollar index and USD CHF, as you can see, they look exactly the same. For me, on Hugo's way, we've had an induction of the low. Today's low has taken the low of the previous day. And this is what I would say is not a confusion, but this is why it's good to look at multiple price feeds to get a confirmation. And I always do this when I want to make sure of something. So on Hugo's way, according to the price action here, the low of today has actually taken the low of the previous day. So this is a great trigger induction for the price to go for a continuation long. All right. In USD CHF's case, the price has gone into supply and we've had a slight reversal. But because there's a liquidity gap, and I'll go to the H4 for you to see this, because there's a liquidity gap that's been left behind here, which is my actual first target for my funded accounts over here, the price still has some room that it needs to go to. Now, what was great, and I should have maybe came out and just re-entered, it's not really much of a big deal, but there's this H4 demand flip zone that the price has come to for a second time, and the price coming to it for a second time is important for a few reasons quickly. So this supply zone, which was derived from, the liquidity was derived from this break here. If I draw this all the way across, the number one major good news to say to you guys, which, you know, I'm smiling saying so, is that this zone has been invalidated. The body of the candle, if I zoom in over here, hasn't closed inside of this area anymore. So that means that we're not looking at the supply liquidity, which lets you know that demand is a lot stronger than supply because this zone is not valid anymore. The price is not closing within it. Whenever the body of a candle closes outside of a zone, above and beneath, because it's in key here to remember, is above over here and then beneath over here, this zone becomes invalid. There's no weight that this area carries anymore for supply or for any sort of buying. There's no interest really at these price points, the way there was back in April, okay? Now with this range there is over here, this demand flip zone, because right now this demand flip zone is acting as a supply zone and we have had some liquidity come from that, right? However, because of the gap over here, I'm pretty confident that USD CHF should be breaking above and reaching to new areas of supply, okay? Now, what do we do here? Now, with USD CHF, because the price on Hugo's way is saying that the price has taken the low, I've already taken a long entry on my funded accounts. I've already got another entry going right here. Because according to this, the price just took the low of the previous day and it's starting to go long. Now, if I go over to IC Markets, which is what I wanted to show you, and why do I use IC Markets? Because it's one of the largest brokers in the world. So my expectations for the price to really give us some fantastic price feeds. And it's not always perfect, but it is pretty accurate sometimes. And if I do the same analysis over on USD CHF on IC Markets here, just switching over, what we've got is that same supply zone over here, prices operating with. But do you guys notice this? All right. And I guess at first, this is what initially I was waiting for to see if the price will take the low. But according to Hugo's way, it's already happened. But the low hasn't been taken on IC Markets. And this is one of those moments in history where there's a very big difference between the two. One saying the low has been taken, which has a lot of meaning. The other one says not to. Now, whenever this happens, I try to go for a third or fourth opinion. All right. And what I usually do, I'll just show you guys, is I like to go for trading view. And I look to specifically use ICE. Okay. Because ICE is one of the largest liquidity providers in the Forex market. So in terms of pricing, I do expect ICE pricing to be accurate. So what I'm going to do, we can do this together. Let me switch over to trading view right here. And let's look at USD CHF from this point of view. So if I go over to USD CHF, I'm looking for the ICE. And you can see it here. It says FOREX ICE. Launch the chart. So let's see that launch. Okay. So all right. I like to use ICE. So let's go now. So you guys can see now it says CHF USD, but it's Swiss franc US dollar. I need it the other way around, and I don't know what's just happened. I don't know if I done that or it was done by itself, but let's just go anyway. USD CHF, not CHF USD. So USD CHF. Don't know what just happened there. All right, so launch chart. Let's do that one more time. Here we go. That's better now. So USD CHF, let's take a look at what's going on. Now, this is the 12-month chart. Now, just to show you the bearishness of the dollar hidden, with the small areas of, bullishness that we're going to have on the dollar, you can see how strongly the Swiss franc has gained in strength over the long term. From 1971, $1 was actually 4 Swiss francs. Okay. And now $1 is less than a Swiss franc. So the dollar is dying, but there is one more moment in history that's coming up for it. All right. And there is possible hope. I mean, I could do some deeper analysis and I'm tempted to, but let's stick to what we're looking at. So if I go over to the daily here with ICE, let's just grab this here. All right. Now it's so far away that the price is not even showing it. Now, okay. So according to ICE, so what I usually do is that I take the next opinion that I see. So in this case, let's get the boxes going. All right. I'm not really someone that uses trading view often, so bear with me. I might be a little bit of a granddad on this. But you can see over here, according to ICE, the low of today, or low of yesterday, excuse me, has been run by the low of today. So it's 2 versus 1 at the moment, which means price should be just going long. And the entry that happened when the news happened at 4 o'clock. Now, there was news today, and I did discuss it on Monday. And what I told you guys is that every piece of news will always produce some sort of result for the direction of the market. Now, with what we've had here with USD CHF, which makes sense, is that the price today was in another range of accumulation. And I'm trying to use the teaching I've just finished with you guys plus analysis at the same time. So here we had a range of accumulation, right? Okay, accumulation. I'm going to put dollars here for short because money in orders is building up. All right. Now, once that happens, now what happens next? So if I take this line, I'll just draw this across here. What do we have going on? So price does what? We have a news. This is, according to this, it says 3 o'clock. All right. But this over here says 7, but it's 8 o'clock my time. So the candle started at 7, according to this, and ended at 8, but it's 8 o'clock right now. So everything's an hour back. So this 3 o'clock is actually 4 o'clock UK time, right? So we've had an accumulation. After this accumulation, what did we have? Price has broken out of this accumulation range. Now, we didn't really have the greatest trigger for it up here, but there was still a trigger. The price has given us the other direction or the other side of this market. Now, how does that look? Well, imagine if you were trying to get a re-entry, because yesterday was a pretty good day, right? This is the 18th. This is the 19th here that we're still operating with. So when the 18th ended, we came into Friday. Anybody right now who bought USD CHF yesterday has been completely obliterated. I want you to get the perspective of that. They done this on purpose, okay? Right now, they get the net direction for USD CHF and for dollar pairs and stuff will definitely be net long by now. So with all the other manipulation they did on Wednesday, what was the smartest thing to do? Push the price up, create a range of accumulation, and over here, which is 7 o'clock, as soon as London Open starts, the market starts to crash down already. So anybody who was buying here would have been potentially stopped out of their positions already, okay? Now, the final piece of the puzzle to get everyone to be discouraged from buying is what? Come all the way down and take the low of the previous day. So to me, this makes a lot more sense, and I'm going to agree with Hugo's way and say that the price has taken the low of the previous day, and it would make so much sense as to why USD CHF, if I've taken another entry here, I won't close it, should be on its way for a long, right? Because of this reason. So if you follow my reasoning here, what am I saying? Well, right now, USD CHF is a good buy. My only thing is that the market is closing in an hour and 47 minutes. And I know I'm supposed to hand in, I'm saying hand in like it's an assignment, but I treat it like that so you can see that I do care about you guys. I was supposed to do this, submit this video to you guys or release this video to you a little while back, but so many things have been happening and I've been extremely busy. So now that the price has already done this entry at 4 p.m., I took the low. I'm somewhere in here at the low. My thing is, guys, is that what we should be expecting is the price to continue going long, okay? And that being said, don't get it wrong. The price may decide to still wick down because I'll give you a few scenarios of what the price may decide to do, okay, to really throw everyone off. Right now, there's a demand order block here that's untouched. The price formed one, is gone long. This low over here, which is the low of the day before, right here. This low of the day before that the market's formed, right? The price didn't return to demand liquidity to go for a long. Okay, second day price came nearby, didn't go back down into this demand zone and it's gone for a long. Now the price has taken the low of the previous week. So any buyers have been absolutely wiped out, okay, by this one candle from the news. However, still, the price is in demand, but there's this demand zone here, which is a second possibility. What do I mean? Well, the market may, and this is a big may, could be even more wicked and do something like this, where on Monday or Sunday night open for us in the UK at 10 p.m., the market may decide to do an even wickeder move, which is to come down one more time, slightly lower, which will really get people to want to sell, and then after take the price along from here and give us another one of these movements over here. So I wouldn't put it past the price for USD CHF to do this. Now, I have an entry here and I would never break the rules and say for you to get in now and swing over the weekend, because you are putting yourself at a risk. Because when the market is, if you take a trade at these kinds of times when the market is closing, you run the risk of having to swing your trade over the weekend, and then when the market opens, you could be stopped out by the spread, especially because Swiss franc pairs do have very high, strong spread. So I wouldn't want to advise that, okay? Now, Friday entries near the end of the day is pretty rare. They usually only happen when there's a historical situation going on. The last time it happened, I believe, was during lockdown when gold made a new all-time high. The best entry was the last candle of Friday. So as soon as you woke up on Sunday, the price was ready to go. It was already going. So you had to jump in somewhere. I've only seen that probably once or twice in the history of my trading. This may be a third, but what I can say to you guys is that if worst comes to worst, you want to first of all see how Monday works, because if the price on Monday, and this is important, if on Monday the price doesn't come back down lower to take this low and it continues going long, what you want to try to do is find yourself a re-entry using the flip zone technique, which is, for example, here, all right? If, let's say, the price comes back to this supply zone area on Monday, but we don't see any interaction with this specific low right here, okay, then you're good to go to continue looking for a buy. And it will look something like this. All we will do, put this here, then we're going to drag this on top of here. And then after that, then we'll just look for one more long and look for the rally up here, right, when the price would continue to go long. And this is really what the scenario is for me. I expect the price to really do something like this, you know, moving forward, right? Now, the price has been mean. I will never lie to you that the price has been really wicked, but we just have to be kind of cautious with the market because they are being cheeky with the way they are behaving, all right? So anyway, now that you have that in mind, and you can use this how you would like. My suggestion is that the time you're watching this video, the market probably would be sharp. If you're already in and you've used your initiative from the teaching I've given you, then it should be in for a long. But if you're not, in a situation like this, as long as Monday doesn't close beneath the low, and at that case you buy down here, if that doesn't happen, Monday doesn't interact with the low of this day, then you, as soon as the price breaks the supply zone, like for example this one where liquidity came in pretty hot, as soon as it breaks and comes to the other side, as I've taught you, look for a buy here, stop losses beneath a few weeks back, and then go for a long straight from there, right, as a re-entry. If you're in already and you've been in since I gave you the first entry, then to be fair, you should just be holding on. Now, if you want to get multiple re-entries, you can, all right? There's no harm in doing so. Just make sure that your risk management is on point. Just because you may be 2 or, you know, 150 pips in profit, it doesn't mean that you should over risk on the next trade and put, like you had 0.10 and now you put one lot, because that could ruin all the gains of all the hard work of being patiently, you know, holding onto a position, that trade, right? That's the thing I would say. All right, so now that you know this information with USD CHF, I do still believe the price is going to go for a long, all right? You know, even down to the M5, the highs over here need to be run, over here as well, need to be run. So I'm sure sooner or later the price will do that, all right? So this is my view on USD CHF. Now let's come back to Hugo's way and look at the other pair. Now, right now, all of the major pairs are really in sync, okay, at the moment. Currently, this week has been one of the nicest weeks for a very long time in the market, all right? If I go to AUD USD, just as an interlude here, AUD USD has been dropping nicely, all right, as expected. He actually gave another re-entry, which I've taken. And again, I'm seeing a pattern here. And the reason why I wanted to show you AUD USD, for example, is because right over here, for example, the price has given us a continuation to go short right here. And the real movement, which is something that I've seen, again, I've seen before, but I don't really trust, but the actual movement for a continuation to, you know, selling, the market has only started to wake up in the last few candles, and I don't like that. It would have been better if the price done that, you know, in the US session when it's, you know, really liquid, during the, you know, London, UK sessions running together, okay? So having that in mind, I think watching the price action here, because these lows obviously need to be run anyway, I'm sure the price will continue short. I am sure of that. But I do think that the spread could be possibly crazy, all right? That's my thing anyway. But I'm still in on AUD USD. Euro USD, similar thing. All right, Euro USD has come back to supply over here. Right over here. Inside of this supply zone, the price has come here and is derived that supply liquidity from a very key and important demand zone. This is the demand zone that was really a key component of the price pushing up to this wick here. And remember the wick that we discussed over here, if I take this out of the way, was to fulfill the unfulfilled efficiency you heard me talk about, which was right over here. The inefficiency in price was filled out through this demand zone. The same area of demand I'm talking about is the same demand zone over here. So this is why I'm saying that this is a powerful area. All right. Now, what else can we say? Well, let's bring up some more pairs quickly. And I'm going to get my view to put standard here so I can get the market watch. Pound USD, same situation. We've had this kind of pullback movement and now the price is kind of getting back down for a short. They all behave the same way. And from the looks of things, I do think that's why I'm saying that we probably have a little bit more of a bullish run at least before another reversal again to kind of re-enter. Now, I also had a USD CAD position, okay, and I'm not going to lie, I got sick of USD CAD. Even if it's going to go for a long to the targets I know it's going to go for, I just couldn't stand it. It's just annoying me. I decided to get the same kind of profitability using another pair instead because I just, yeah, really, truly annoying. All right. So again, I'm just scanning through these and having more of a discussion with you because sometimes I like to just discuss whilst I'm analyzing for you guys to see what I'm looking at when it comes to these pairs. So just doing that quick walk through really quickly, excuse me, you'll be able to see, you know, that the pair direction is pretty strongly in the same way. USD JPY is pushing up for a long. Now, in fact, again, I'm so annoyed because USD JPY, I always talk about it. I had an entry over here and I'll find the entry to show you proof. I wish I just held on to it. I don't know why I didn't hold on to it because I knew the price would do this no matter how many months it took, but it's a great 1,000 plus pips already, you know, and it's only the beginning, right? But in general, you can see that with the major pairs, they are trending in the right direction. USD JPY is clearly going long, okay? In fact, USD JPY has closed above its own high of the week that I created at the beginning of the week, right? Beginning of the month, sorry. It's closed above the high of last month here. Let's put this line over here quickly. It's closed above the high of March right now. So let's drag this on. Yeah, it's closed above the high of March over here. And is also closed above the high of December. So in this one daily move yesterday with this strong bullish movement, that's why I'm saying that this bullish movement yesterday meant a lot in the market. It's closed above several monthly highs with the body of the candle, which is a very good, strong indication that we're going to continue pushing on the bullish side. Okay, USD CHF, we've already discussed. Okay, USD CAD, same thing. It's just that USD CAD has been very highly manipulated. This week has kind of been, I wouldn't call it a range, but just a strange price action movement. We've had bearishness in Asia. Then we've had a bit of bullishness in the US session, and then just random movements throughout. They're not completely random. They do have a meaning, but this very slow in terms of where USD CHF should, USD CAD should be, right? But I do think that next week this should start to rally up and I'll probably get in again, right? NZD USD, right? It's pulled back over to this important area of supply right here that we'll be looking at. And I do expect the price to really give us a continuation short in that manner. What else do we have? Pound USD. You can see that Pound USD, NZD USD, they have different levels of bearishness, but they're all selling off in the same way in general, right? H4 price is selling off here. USD CAD, excuse me, Pound USD price is selling off here. We've got Euro USD, price is pulling down here. AUD USD, same thing. Even if I was to go over, just to prove this to you here, before I do the final pair, Bitcoin, even though much movement hasn't happened this week, is kind of ranged. The net direction as we're getting towards the end of the week is still bearish, okay? The price is pulling back down short, okay? If I pick up, I don't know, Doge, for example, Dogecoin, I'm just doing this just to kind of run through, showing you what I mean when I say the price is bearish. Dogecoin is also on its way down. Very strong bearishness, all right? Stuff like that, okay? So whichever way you put it, okay, Monero, same thing. They're all following the same pattern. The dollar is the main controlling factor when it comes to the strength of the market, right? So in terms of dollar-denominated asset markets. Now, since I've gone through all of that, let's go through the last pair, which is gold. Now, gold has been a love and hate relationship. I had such a great trade I spoke about yesterday, which was over here, that the price just didn't trigger what I wanted by literally a few pips, less than maybe 1 pip. Now, I'm very specific. That's just how I am. I wanted to see the price go above this high before I took this sell. I wasn't comfortable with just taking the sell when the price hadn't taken the high, but gold had other plans in this situation and just completely melted. You know, even though the price has pulled back somewhat, but at the best yesterday, there was 708 pips of just pure fantastic profit. I even gave a shout out to my academy students to get in once the price takes the high. Now, maybe some of them took the initiative. We'll see at the end for anyone who got in. But again, the analysis that I talked about with gold has played out perfectly. Now, one other reason, again, as I said, why I believe the market is in a very heavy bearish stage in terms of anything paired against the dollar, so the dollar is the quote currency, is going to be selling off for a little while, is because of gold itself as well. All right. Now, to do a quick analysis, since I've gone through this before, I can save time on talking about this. Where do I see gold going? Well, one of the first things I'll say is let's trace liquidity, of course. Now, there's two ways we can do this. We can actually frame this from discount and premium pricing. And in this case, I would like to. So what I'll do, I'll go over and look at the last bullish run here. Let's take a look from that angle first. All right. Now, when we look at where we are right now, where is gold holding on? Well, gold is right now has just dropped onto the last retail level before the price gets towards equilibrium, right? Now, what can that be in terms of anyone who is bullish on this market or the bullish holders in this market right now? What would be the smartest thing for the algorithm of the market to do? Well, entice people to buy in at the 38.2 level, thinking that the price is going to go for another long and then completely crash down. Now, there's a little bit more obviousness with gold because on every chart that I've seen, there's a unanimous vote among all of the price feeds for gold that there is, in fact, a liquidity gap at 1865 to 1870, somewhere in that range. There's a liquidity gap, right? So with that liquidity gap being said, there is at least, let's just say, guys, with optimal trade entry being right at the middle of that gap, at least another 1,000 pips to grab on gold. So even though this initial high, which is what I really wanted to grab, hasn't happened like I wanted, I missed the entry completely, or the re-entry as well, at least there is another set of at least 100 pips. So at the moment, even if gold was to be bought, guys, and as I've talked about premium and discount, in this current market, even if institutional money wanted to do that, which they probably won't be doing, or most likely, I'm sure they won't be doing. In order for any gold buying to happen, let's think about context here. The reality is that the price needs to be a lot cheaper than it is before the real buyers are going to get in and buy a lump sum, right? Or put liquidity into the market. So by default, we know the price is going to be giving us some sort of short if we're just looking at this last trend. Okay, if we take it from the other side now, okay, and look at the bearish side of the market, which is the most recent bearish trend, and I'm going to need the D1 for this. What can we do? Well, we could take from the high to the low over here, and I'll even use the H4 and just kind of follow through with the weeks and see what's happened. Now, at the moment, for this week, if we just took this week to see the range that we're in, now the bigger range is going to get in your eyesight way, so I'm going to get rid of it. Let's go back to the H4. If you need to, we can even do the H1. And let's just kind of look at what the price has done, right? So if I take this over here, take the top to the bottom over here. Let's just make sure this is the H4 properly looks good. Here you go. So over here, what has gold done right now? So let's observe the first thing. Now, first things first, where's the fair market value in this? Now, this thing is supposed to be here. There you go. Let's just make sure it's a little bit fiddly, but here we go. If we look at the bearish price action just for this week, all right, starting from, in essence, Monday, we've had selling all throughout the week. Now, the first things first that we need to work out is that where are we in terms of price action? Now that this swing low has formed, very importantly, let's look for the first thing. Now, the first thing we need to look at is where is the equilibrium point in this market? Now, according to fair market value for this week, if we're measuring pricing based on this trend, before we go to liquidity, the fair market value price for gold, according to this premium and discount pricing Fibonacci, is 1986.98. So let's just call it 1987. So the fair price is 1987. Next thing let's look at, is there any order blocks to the left? And as soon as I say that, you can see it. There's an order block here, even smaller ones nested on the side. There's a very clear, obvious order block just above where the price is shorting for gold, right? So let's go over and turn this to another color so we can really see this. Right, so right here, fair market value also has a supply order block. So what would be the best thing that we should look for coming into gold? Now, if we look at what actually happened already today with the price, okay, when the news came out, the price wicked back into this area. Now, this orange color, I think, is really not doing a great job for our view. So let's try something else. All right, here we go. So this right over here is a H1 supply zone, right? Over here, H1 supply at equilibrium. So H1 supply zone. Now, at the moment, gold is heavily bearish. And now when we put the context here with premium and discount pricing, then it's going to make a lot of sense right now why buying just took place over here, and it specifically came into this supply order block, right? Now, what is the theory here? Well, remember, if we're going by scenarios, and I can just try and bring this to the left. Scenario one is that the dollar index itself, okay, not to be confused with what USD CHF has done with the lows. On Monday, USD CHF could give us a short-term bearish movement to take the low of the previous day. In terms of market day will be Friday. And then from that reaction, which is at fair market value of equilibrium, also give us a very strong low. Second scenario is for a more extended, weaker dollar until the price gets into this demand order block range over here from 102.290 down to 102.022. Anywhere within that range will give us maybe a few more days of bearishness or an extra day of bearishness even. And then from there, we launch for a low, right? Those are the two main scenarios. Scenario three is that the price doesn't do anything I've said and it just goes long, right? For the bullish scenarios. Now, back to looking at gold. At the moment, gold is selling off right now. And I don't feel comfortable because gold is selling off very strongly near the end of the day. And to me, it just seems a bit like his engineered price to kind of get everybody excited to keep on holding their position before they do some sort of liquidity run. Now, I'm just being extra. Now, the thing is that this may actually not even happen and price may just sell off, okay? But I've been trading for so many years that the market is very mean, especially over the weekend, because no trader can change their position. But they can obviously add or do quite a few things when the trading market shut. You know, there's still things they can do to control the price. All right. Not to mention we have broker spread that will be very high on Sunday night, Monday morning. So my thing is really when it comes to gold as the final pair that I'm looking at, because those two USD CHF and gold are the highest probability, I would say we have two things. First thing is that I want to see what the price does with Monday. If the bearishness of the dollar does happen, scenario one superimposed on this chart would look like this. It would look like us having, and I'm going to put this here, a weaker dollar, so negative dollar here. And then from that negative dollar, then from there, we're going to go for a sell, right? This is really the situation when it comes to price action that I'm looking for. So a negative dollar index and then a positive dollar, right? That's the picture I'm looking for that will give us the short. So if scenario one plays out, this would be what I'm looking for. I don't really trust the way the price is just selling off near the end of the day like this. It will be very easy for the market to why not just say, okay, we're going to come back up here and do another spike here. It wouldn't surprise me too if the market did it. Take the high of Friday and maybe even the day before Thursday, run all the stop losses, and then at equilibrium fair market value price, sell off from there. Okay, this is what my mind is thinking about. The second deeper scenario that may actually happen also and this is an extreme one, but it's possible, is that if we're taking the range of this week and looking at the price action from that standpoint, we have another order block over here. We have a H1 supply order block over here, H1 supply zone, right? Now, this H1 supply zone is also coupled with the fact that the price is an optimal trade entry 78.9 and 86 in this range. So this supply order block is a very high probability area where there'll be discount pricing for a sell. So in the event that the dollar has an extended bearishness, and gold sensitivity to the dollar is questionable because gold is highly manipulated, probably the most manipulated asset. Gold could do 200 pips whilst the dollar index only moved 10 pips for the day. All right, because that's how manipulated it can be. All right, but if the second scenario was going to happen, then that could be a situation where we get some sort of return here or a trigger. Gold goes long back to the 2008 into the supply zone, gives us some sort of reaction, and then gives us the next level of sell. All right, that will be a second scenario that can definitely happen. All right, and these are my scenarios when it comes to the trades that we've gone through now. I wanted to make sure that I do this video no matter what, guys, no matter how tired I am. I want to make sure that you guys have everything you need to really do well. All right, so again, as our tradition and custom is, the final thing that I do want to do is go through the news for the next couple of weeks. Now, we've already been doing news projections. When I did the last episode, we looked at the news podcast, and this is why you should have been very well prepared for what was going to happen at 4 p.m. today with the news. Something was going to happen, either for our favor or against our favor, but some sort of re-entry or continuation. Something was going to happen, right? And it did. I don't even know what Federal Powell said. He may have never said anything significant, but the market is very smart in the fact that anywhere that they can inject liquidity and mask it over news, they will. So even if Jerome Powell didn't even say anything that is actually significant, just the timing alone of him speaking is a good enough time to kind of mask in and come with liquidity to manipulate the price. Okay. So let's look at the news outlook for the next, this week, next week actually. Let's see where we're going. All right, so if we take the information here, so next week, let's start from there. What we want to be looking for is primarily US dollar news. That's the highest impact news that we're looking at. Now, according to this, next week we have New Zealand dollar interest rate decision, which is definitely going to cause some reaction on the New Zealand dollar, US dollar, for sure, and all the other New Zealand dollar pairs. All right. If we go over to this same week, I believe we do have FOMC, if I'm not mistaken. Yeah, here we go. So next week, Wednesday, guys, we have the FOMC minutes. Now, the FOMC minutes is the written minutes of how, or what I should say, the governor of the Federal Reserve and the governance people, I almost called them an academy, but the Federal Open Market Committee, in essence, what they think, what are their plans for the future, how are they thinking about the economy and the US dollar, the US economy, and etc. Okay, so now this 7 o'clock news, because it's written, as I always say, if the market reacts straight away, then it's straight manipulation, because it does take a little time. Even an AI bot won't be able to scan through a document, in just a millisecond. It will take a little time to read. Okay, so at 7 o'clock or this week, the US dollar will still continue to be volatile, and this news could be for or against our direction and cause the market to drop. All right, so next week, Wednesday, is a very big day for us at 7 o'clock. We may have a very strong reaction. And by the time we get to Wednesday, we would have already had one live session on Tuesday. So that means at least we'll be able to prepare ourselves really well, and we can all sit together and work out what's going on. Now, the next day, straight in, we're coming in with the GDP of the US dollar, which is another very high impact piece of news. Okay. And if this becomes out negative or positive, it will have extreme effects on the price of the dollar also. Okay. So that's the next piece of news on Thursday. Now let's look at Friday. I'm just focusing mainly on US dollar news. Now, if for individual, major pairs, like let's say pound USD, I would look at pound news to just see, because there are going to always be variations between the major pairs and how they move. Okay, sometimes there's a bit of delay, like AUD/USD and NZD/USD. For example, especially NZD/USD is not following the same level of bearishness as other major pairs, ex-USD pairs are. Okay, so you always have to have that in mind when you're looking at the price action. If you're trading pound USD, you really like it as a pair, like I do, then you definitely want to learn as much as you can about not just the US dollar news coming out, but the pound news coming out. Okay, so that is the next week. Now, I always like to go 2 weeks ahead. So let's go into the next week after that. So the next week after that starts on the 28th, or let's just go for next month. Now, because I need to go to the month before, so I'm going to go May. I'm going to go from May, and I'm going to start off with the 28th, and then I'm going to go until June. Let's just go until June the 4th. All right. So when we get into that week, no high impact news just yet. Wednesday, the last day of the month. All right. GDP for the Canadian dollar. So Thursday, nothing at all. Let's see what we have on Friday. Friday, nothing at all here. And okay, apart from the non-farm payrolls, of course, but nothing extra. But yeah. So I guess there would be some sort of news. We have the ADPs as well, which can cause a reaction as well. Okay, because it's the first Friday of every month, we have that news. So, okay, yes, next week, Fridays, we have some stuff that go on. So we do have a 2-week range in short, to keep it as short and sweet as I can, where we do have a lot of US dollar news that can cause a lot of strong volatility, and the market itself is strongly volatile. All right, now, I know I took a long time today, guys. No, apologize if I do sound a bit tired. I am really tired. Okay, I am a little bit late with this recording, but if you're watching this, I just want to make sure that I keep consistent, at least to get this content out to you every week. And I do my best to keep it on time as well. But as always, guys, it's been a pleasure to have you guys, and I'll catch all of you later. Everyone take care and have a great day.